All right. Hey, everyone. We'll get started here. So just want to quickly do a sound check. So Nomadic and Mariana, can you try to unmute yourselves? Let me know if you can hear me okay.
Yep. Can you hear me? I can hear you.
Hello, can you hear me?
There we go. Hey, there we go. Yeah, you guys sound great. I've got
We got Lux as well, who should be on,
oh,
who should be a
fantastic.
speaker.
Uh, is that Master of Folding?
Yeah, that's him.
Here we go. I will add him right now. Oh, there we go. Oh, let's see if I got you. There we go. Hey, Lux, can you hear us okay? Actually, Lux, see if you can unmute yourself.
Hello, hello.
Hey, there we go. You sound great.
Aw-
Okay, awesome.
Awesome.
Guys, anyone else from the Origami team that we should wait on, or is now a good time to get started?
We're ready to start
This is
anytime.
good.
Oh,
Yeah.
fantastic. Okay, great. Well, hey, thanks for joining everyone. For folks that listen to this in the future, just a reminder, Yield Talks is a space that we host every Friday. Our goal here is to be an extension of the Edge podcast where we have more in-depth conversations with, leading top builders and investors in the DeFi and Web3 space. But through Yield Talks, we aim to have a more focused conversation just on yield. So our goal here today is we're going to talk all about the folding protocol, origami finance. Another way to kind of think about it is tokenized automated leverage. And this is a protocol that is live on Ethereum mainnet, but is excited to be one of the early builders on Berachain. So that L2 will hopefully be, fingers crossed, launching sometime this year. And we'll get into more of that and just how to use the protocol and how this all works. Just a quick reminder, though, before we do get started, as always, this is not financial advice, but hopefully you find this interesting and you can learn something about how this DeFi protocol works. So that said, uh, Marianic and Lux, would either of you want to just give us a give us an overview? I guess expand upon some of what I shared there. Like, what prompted you to start building origami? Like, what's the problem you're trying to solve?
I can start. So Miri and I, we started out as contributors on the Temple DAO team. Temple is a protocol that is has a token that is backed by the value in the treasury. And one of the challenges of managing the treasury for Temple was just being able to catch the different yield opportunities on mainnet. And it was quite a challenge because of not only the risk of certain protocols rugging or being exploited, but the yields would dry up for single or even multiple farms over time, in which case you would have to sort of move again and look for the next opportunity. We were looking for yield opportunities that were scalable, meaning that someone with a eight-figure treasury or uh, even larger than that could enter the market and not sort of lose the returns over time, and also being able to sort of um, stay within the robust protocols on mainnet and not have to go out to, I guess, the wild parts or the borderlands where a lot of weird things can happen. And as we were thinking about this challenge, we came to the conclusion that it was better to sort of build automation tools and leverage tools for us to take advantage of the low borrow rates on mainnet and sort of leverage into like a larger position on relatively stable farms like Lido's wrap staked ETH or the Athena farms. And so as we were building these tools out, we came to realization that these are tools that everyone can benefit from, not just protocols with a large treasury, retail users. Many of them have heard about leverage, have heard about looping, but it was such a daunting thing for the average retail user to be able to take advantage of this particular financial mechanism. So that was sort of the birth of Origami. It's basically leverage infrastructure for the masses.
Yeah, that's awesome. And maybe taking a bit of a step back. So this is typically referred to as looping. I think you guys call it folding on Origami for obvious reasons with keeping with the Origami name. Maybe just explain how that process works, like at a high level, and then how you go about automating it.
I think to give kind of the broader, expand a bit on the broader scope of Origami. It's obviously an apropos name for another word for looping a debt position to create that leverage exposure to an asset. And what we want to do with Origami is create a new DeFi money Lego via our leveraged Origami Vault tokens or Love tokens. We create composable automated leverage. And then, like Luck said, we fully abstract away that position management part. And we fully integrate with the third-party lenders, so we're not constrained to internal lending pools. So we integrate with Morpho, Spark, etc. And then, it didn't just cut into our time of doing hundreds of multi-sig transactions for looping, but it also is a more capital efficient way to do so. And you minimize the risk of liquidation and bad debt as well when using Origami. And so with that, we went live as sort of the initial step. We went live in April, and now have a TVL of notional TVL of a bit over 53 million, mostly in vaults for farming, popular protocols like Athena and Usual, EtherFi. And since today, also directional vaults. So for directional leverage, if you want to go long Aave and have that automated, you can. And then going one step further, on Berachain, Origami can then create and incentivize liquidity on dexes like Kodiak for several of these new Love tokens, so people can effortlessly swap in and out of automated leverage positions like any other token. And then at that point, it essentially becomes a new DeFi primitive. And then, allows us to make use of the Berachain's unique consensus mechanisms and drive further liquidity via a flywheel of incentives, so to say. That is Origami's folding process from like a high level.
And just to call out, like, I guess some of the considerations that at least I've had, like being like a user, when you are getting into these Love tokens, I mean, it is very dummy proof. On the website, origami.finance, it says leverage for dummies. And that's because there isn't any sort of like decision making here beyond what vault am I going to enter and how much of the token am I going to deposit. Like, it's a very Yearn like YEARN, Yearn, however you pronounce it, Yearn like user experience, versus there's other powerful tools out there for looping strategies, and some of those give you the power to choose how much leverage. Here, it's ideal for someone who really wants to have more training wheels on, and just look at like a vault, like one that is 7x leverage versus one that is, let's say, 10x leverage. Before we talk more about those different strategies, because there are different collections. The collections represent different types of assets, like LSTs and LRT leveraged farming versus Athena type tokens like USDE or PT tokens from Pendle. I want to just back up for a moment on this like automation for liquidations. And I'm thinking, given the sell-off in the last few weeks, there's probably been somewhat of like a stress test there. So what can you share about what you've observed in the system? Like, how has it performed? Any lessons to take away? Any good examples to kind of like demonstrate the power of the platform, like during those sell-offs?
So I think that's funny, and I'll let Lux expand a bit on how the automation works within Origami. But on the day itself, we like nothing of note happened. Origami was perfectly stable as is, and that made us look more of like, oh, our personal positions are getting wrecked right now. Outside of Origami. And then we had an investor reach out and ping us, and they asked us if everything was still running smoothly, and we're like, oh yeah, fuck yeah, no, yeah, Origami's totally fine. Yeah, nothing of note happened. I would be interesting to see. So after today, today we went live with some of the first directional vaults to go 2x long short ETH or 1.5x long Aave. That would be interesting to see how that would run. But yeah, nothing of note happened. And yeah, I'll let Lex expand a little bit on the automation process within Origami, like digging in a bit deeper on that, how that works.
Lux, by the way, see if you can unmute yourself. Otherwise, I'll unmute you. In fact, he might be muted. Maybe it's because I muted him earlier with the echo there. Oh, there you go. Is that working?
Can you hear me now?
There we go. Yes, we can. Go right ahead, buddy.
Okay, awesome. Yeah, so just going back to what we discussed earlier about leverage and why it's sort of daunting for retail. Everyone loves the idea of leverage and getting sort of sky high yields, but the risks that come with that are not well understood. And one of the things that people tend to overlook is the difference between the different lending markets that you may be using to get that leverage. So on things like perps or maybe other platforms, you could get liquidated on the wick. And that's because the oracle that is being used for that particular market where you're lending or borrowing from, if the price falls below a certain level, then you're liquidated, and that's that. And that's exactly what happened on the day that you're referring to when ETH dropped a lot. But for us, the markets that we participate in or borrow from, they're using hard-coded oracles, which means that for something like EtherFi ETH, for example, it's hard-coded to 1 ETH, which means that sort of no matter what happens, that particular market is not going to be liquidated on the wick. Now, of course, the interest rate can go up a lot, which will increase your loan to value ratio, but that's a relatively slow process. Even if the interest rate goes to, say, 3 digits, the position will be fine, and we have the automation to sort of unwind the position as necessary if the interest rates stay high. So that is something that Origami allows users to do, which is you can basically stay leveraged and you can rest easy and go touch grass, and you're not worried about like getting liquidated on the wick, or you go on vacation for a week and then the interest rate goes up while you're out, and you come back to like an empty account. So that is something that I think Origami offers to users.
Hey guys, maybe let's kind of walk through some of your vaults right now too. Like, maybe even take us through each one, or kind of the more prominent ones that you want to talk about. I'll just like call out all of them right now, and kind of just pick whichever ones you want to focus on. But there's the Love LST vault, there's the Love Athena vaults, there's the Love Pendle vaults. There's a new one that I think we should definitely discuss, this Love Tendies vault, which is basically new directional vaults, and then the Love Staples vault. So any one of those you kind of want to dive into, maybe kind of break down the constituents of what's like in those vaults. Just kind of go for it, and we can kind of talk through those yields and where the yields are coming from.
You want to take that, Lux? So shall I start? Should I just pick one? I can pick one. So I think Love Athena has definitely been one of the more popular collections because it allows you to farm Athena sats and yield. Yield's pretty low right now. It wasn't for a while, of course, before we started bear crabbing down. But before that, the yield was pretty good. So we allow for automated SUSDE looping, automated USDE looping, and then also as of recent, the Pendle PT looping, which is still quite good yield. And what's interesting about these vaults is that it's essentially more capital efficient than any other way of farming sats. I think we came out, like we calculated it, and at least compared to YTs, it was like 35% cheaper. So those ended up being quite popular early on. I think personally we've also been depositors into that. And then as I mentioned earlier, Love Tendies launched that today, starting with a 2x long ETH vault and a 2x short ETH vault, Vitalik bull to Rin and Vitalik bear to Rin, and then a 1.5x long Aave vault called Just Use Aave. And yeah, we'll be adding vaults to that as liquidity comes along. We have some ideas for new directional vaults, but just waiting up for some new liquidity to open up, and then we'll open up more of these vaults. Maybe Lux, you want to talk about usual and Pendle LSDs?
Yeah. So before I get to those other vaults, I want to sort of go into a little bit more detail about the points yield. So over the last year or so, I think this idea slowly became entrenched in the mind of DeFi, which is where before there were points and you could farm them, but now there's this idea, especially since Athena started their seasons, that there's this idea that points is yield, and that is, I think, what really drove Pendle's TVL above 2 billion. Right now, I think it's around 800 million, but almost like 90% of that TVL is in the PT markets for staked Athena, and also like another 15% or so in the USDE market. So basically 95% of the PT and YT market is all Athena farming. So basically people who have staked Athena are able to get yield because there are people who want to farm the Athena point season and get the shards or sats or whatever the points are called. And so what Origami did was we recognized that there are users who think of points as yield. And so we priced that yield out using the Pendle YT Oracle price. If you go to Pendle YT market, you can kind of see like, oh, if you're a PT token holder, you can essentially sell that yield to like a YT buyer for say 16% or 11%. And that is, we can calculate that on a per point basis or per sat basis, what that yield is. And then since we're leveraged, we multiply that per sat yield by the amount of points that you get when you're in the Origami vault. So that way, sort of everyone benefits, right? Like your YTs, people who are looking for points can farm like pure points with no exposure to staked Athena. And then similarly, people who, instead of doing PT tokens using your staked Athena, you can go the leverage route on Origami itself.
Yeah, that's a great breakdown. I think that can be missed, that points are actually part of the yield here. And then one other kind of like extra kicker here in all of this, and maybe one of you can speak to this as well, is the Origami points are actually being accrued in all of this as well. So maybe just kind of remind people like where you're at with your own internal points campaign, and just how people are getting exposed to that, which I mean is kind of like a yet to be determined source of yield. We don't quite know the value there quite yet, but yeah, maybe speak to that a bit as well.
Yeah, gladly. So we started this points campaign, I think as soon as we launched, April, and running until September or when Barachain launches. So I think it's going to be September. So that'll be season 1 at least. Then, and the points, by the way, you can see we have most of our posts that we put on the Origami Finance Twitter. You can see we link the original Mirror article for the Ori campaign, Ori points, Ori meaning folding in Japanese, and so that's for season 1. And you accrue these points naturally by depositing into these vaults, and it tends to be respective to how high the AUM fees for the vaults are. And then, for instance, if it says 10x Ori, we take a daily snapshot, and then per dollar per day, you multiply that by the Ori multiplier, and that's how many points you are accruing on a daily basis. Then season 2, the idea was to launch that immediately on Barachain, but may have to wait a little bit with that. But yeah, the first snapshot shall be taken soon, I guess, next week, at the start of September, likely. And then, yeah, TBD announcement for season 2.
Super helpful. Guys, I want to go back to some of the different love vaults. So I think we covered the Athena strategies. Probably one of the more popular tokenized vaults there is the LST ones or LRT ones. Can you just touch on like what's some of the thinking there, and are those as points driven as, like, let's say the Athena strategy, or is there more real yield there that's in that estimated APY, APR?
So for the Love LSD vaults that we have right now, we have folded EtherFi vault, which is mostly made up of points. Like you do get some of the levered yield, but the majority of the APY is made up of the estimated APY is made up of the EtherFi and eigenlayer points. But then we also have vaults of, for instance, there's a quite nice 14x wrap staked ETH, leverage wrap staked ETH vault, which is pure levered yield. And that's yielding about 12%. So you just put in your wrap stake ETH, and then you get 12%. So the borrow cost of that, comes down to 29%, and the levered yield is 41%. And then you end up at around 11, 12, 13% APY on that vault. And then there's also folded Origin ETH yield, which is also pure yield, has become a bit more juicy in the past week. I think some of the liquidity was removed for a little bit. But now it's yielding about 13% as well, which is also a nice option if you just, low risk, just pure leverage yield.
And I want to comment on that. So basically the key to like great leverage yields is there needs to be a spread, right? So meaning that the rate that you're paying on the portion that you're borrowing should be lower than the yield that you're getting from the underlying. So for something like wrap staked ETH, the yields are quite sustainable because there are deep pools of liquidity, basically ETH lenders who are looking for relatively low yield, and it's a huge pool, so the utilization rate is relatively low as well. And if the underlying yield from Lido or Origin or whomever, EtherFi, is better than that, then you're always going to get this positive spread. And when you multiply that by the leverage factor, that's how you can go from, say, 3% to 13% or even 17%. This kind of yield is sustainable long-term as long as there's a positive yield spread. But historically, that has been the case where there's a positive yield spread of about 1% to 2% over the long term. And when you're in the Origami vault, you don't have to worry about market timing. You basically just deposit, you can forget about it and let the market play itself out.
That is such a good point. So if I were looking at the Love LST collection, I think to Lux's point, the wrapped Steph vault that is 14x leverage. What I'll do is I'm of course first thinking like what kind of assets do I hold? Like what here can allow me to earn yield on those? And let's say again that I'm holding Steph or wrapped EETH. When you go to the app at origami.finance, uh, under the EAPY, they have a little like eye bubble there, and you can see the breakdown. In this case, for the 14x wrapped Steph yield, you can see the breakdown of the levered yield versus the borrowed cost, the interest that you're paying in total, and then the performance fee. And to his point, the rate to borrow wrapped Steph has just not been driven up the way that ETH has. Now, my expectation is like over the next year or so, as the market cools off from the eigenlayer speculation, hopefully we see something like an EETH start to come down in borrowing costs. But that's why right now, if you hover over this EAPY of 28% for a 4x vault of wrapped EETH, it's being driven, the yield here is really being driven by these etherifying eigenlayer points, the estimated value of those. But the borrowing cost, I'm expecting that to come down quite a bit. So, these are things to sort of forecast, like when the market, cools off a bit. I mean, at the end of the day, like an ETH LST, like Steph by Lido, or in this case, an LRT that's capturing that, like EETH, and plus some extra sauce on top of it once Eigenlayer is fully up and running. Like these should be some of the more sustainable vaults. Going with that sort of narrative though, or that strategy of real yield, I feel like another vault collection we should cover then is Pendle. Would you guys want to touch on Pendle? Like what drives the strategy with these PT tokens? And again, it's not a negative to have a strategy driven by points, but I think one thing that would stand out for me with these is there's more like predictable real yield for us to capture when we're dealing with those fixed rate principal tokens by Pendle.
Yeah, so I think until the Athena season 2, like there hasn't really been a significant market on Morpho Finance for any PT token. Basically, you need to get to the scale where there's just massive demand to farm the points or the sats or whatever, and then there's like a lot of PT tokens being minted, and then the curators on Morpho like MEV Capital, RE7, Gauntlet, etc., then they'll be interested in sort of like depositing or lending against this like a large demand for points. So for something like the Staked Athena USDE PT, that was sort of our first leveraged vault that would basically deposit the Staked Athena USDE token and then borrow DAI against it, and then convert that to more of the same collateral. We think that this is an excellent way for PT token holders in particular to get leverage on something that had not been possible before, at least not in an easy way. And basically, without any points or any sort of like volatile yields, you can kind of lock in your PT yield and also get leverage on that spread that is between the PT yield that you get on Pendle and the borrow rate on Morpho itself.
I also wanted to highlight, because I forgot to highlight this, in the Love Stables collection. Yesterday we launched a usual vault which is now usually, I think, the fastest growing stablecoin today. Recently launched, 200 mil TVL. And as of yesterday, we opened a USDO which is their bonded USDO vault. So you get 5x their pills, which will convert into usual tokens, which is part of the whole usual value prop where you own a part of the stablecoin. So the pills will convert into usual, which gives you governance and ownership over the stablecoin. And then today we also launched a SDAI, open an SDAI Vault 11x. So if you have some SDAI sitting around, you get 20% APY on that one.
And maybe a little bit of alpha for your listeners. There's already a PT token for usual on Pendle, and they are in talks with some of the larger creators to create a borrowing market on Morpho for the usual PT token. So if that ever comes to fruition, you can bet that Origami will be on top of that very quickly.
Ooh, I love that. One more interesting tidbit for usual, and this kind of like pills campaign that they're doing. I feel like this is a bit of a rare case where they're giving us the start and the end date. So there's kind of like no shenanigans about when this is going to end. I think it's don't quote me, it's in their docs. It's sometime early November, I want to say. But they've also been upfront about how much will be airdropped. So I think it's like 7.5%. So what this means is this gives you like a little bit more edge to kind of calculate kind of where things might end up. You have to take a bit of a gamble of what you might think the FDV of this project might be, when it's all said and done. But kind of a few more data points than we usually get. So no pun intended there on usually, but yeah.
Yeah, I'll say the Love Stables collection, which by the way sounds kind of funny. It almost sounds like a jewelry collection or like some sort of Valentine's Day chocolate package. The SDAI Vault with 11x. This is one. This is one of my favorite strategies because it's all built off of real yield. It's predictable, at least for now, because of the fact that the DSR is, it's flat, it's fixed. So it's definitely one of like the best examples, I think, of like the power of the platform to offer some sustainable looping, folding type strategies. Whereas I don't mean to throw like a wet blanket on some of the other vaults, but I think it's really important that like I as a user have to decide, am I looking for, again, safer, more predictable levered yield on something like the SDAI 11x vault, or do I want levered exposure to like a points program, to a future token? Obviously, it'll translate to that for some of these protocols. And I do think, there's there's a real chance to outperform in the market, if that thesis plays out. Sometime earlier in the year, everyone was dogpiling into points, but now I'm personally wrestling with like, all right, things have cooled off a bit, which means that some of these points programs are becoming less diluted, which actually could prompt me to want to get more exposure, knowing that things have cooled off. But also like trying to forecast like what does a future fully diluted valuation look like for some of these token airdrops, or in the case of something like Athena, we already know where the token sits, so we can start to think like, all right, well, where might the token be if I'm going to look at that airdrop as part of my yield. One last thing too, just to call out that's top of mind, it's at least been for me in terms of using the vaults, is I love the fact that you can ultimately like exit these vaults. Let's say like you're using X amount of liquidity, and you're earning with stable coins, and I don't know, you need to pay back a loan, and so you decide to exit it. you've still accrued a certain amount of like points there. It's not like all or nothing. So it is it's just like one more benefit at least to the design of the system here. Guys, anything else that you think we haven't covered? I feel like we might have gotten through all the most important topics, but yeah, anything else on the Origami product suite that you'd like us to highlight?
Yeah, I'll start. So, I think one of the challenges that we have is sort of conveying to the retail, the DeFi public, like what is Origami, right? It looks a little bit like a yield aggregator, but then you can do all these other things. So it's a little bit of a new animal, so to speak. And going back to the point you made earlier about sort of like the rise and maybe the descent of the points farming, right? So Origami obviously launched with these very popular points farming vaults, but then, like you said, we also launched these more sustainable sort of real yield, air quotes, vaults that allow you to get more ETH exposure or DAI exposure. And then now we have these directional vaults, the Love Tendies collection, that allows you to now be even more sort of take a position on ETH or Aave, for example. And this is all part of our overall strategy to make Origami a kind of like not only like a yield aggregator, but so much more. Like basically something that allows you to hedge your exposure within whatever portfolio that you have. Like you can points farm if you want to ride that volatile yield train, or you can sort of have a portion of your holdings in these long-term, more stable vaults. And then, if ETH ever pumps again, you can go extra long on ETH, and you can do all of that on the same platform. And we have a relatively limited selection compared to some of the other aggregators like Contango or DeFi Saver. And that's because we believe in vaults that will get high traffic and are sustainable. And so the reason why there's, we call ourselves DeFi Leverage for Dummies is because we want to take a lot of that decision-making or confusion away from the user, and you can sort of just pick from a few very select and very choice selections and go rest easy.
Yeah, I think that there's benefits potentially to potentially other platforms offering that like ability to choose what your leverage is, but for most folks, I think most folks really do need all of the guardrails that this system offers, so that they can just basically decide like, all right, again, how much principal am I willing to deposit in order to earn with this? That way you can focus on doing other stuff. That said, I will just call out that obviously there's real risk to using this. Treat this like any other sort of DeFi protocol. Um, always consider. I always consider like how large is my position, how much could I potentially lose if there was an exploit. Like there's just all of the real risks to using any sort of DeFi protocol, and obviously those still exist here in Origami. Guys, this is a good place for us to wrap up. So I would remind everyone they should learn more at origami.finance, follow origami_fi, click on Miri's profile here at it's Mirionics, click on Master of Folding's profile, it's Luxiverse, and of course, please subscribe to the Edge podcast. Our link tree is edge_pod. We are about 110, 112 episodes in. We just released a new episode today on a decentralized Bitcoin reserve being built by Solve Protocol. And that all said, guys, any final word or call to action on Origami, or any final bit of alpha you might offer us on Berachain? Sounded like you think it might go live here in September. But yeah, thanks so much for your time.
Yeah, on Berachain, I'm going to say I'm going to echo just what Smokey said. Weeks, months, not quarters. I think it's getting pretty close. I also know that they probably are aware of market timing very well. We are also in suspense, but yeah, very excited for it. As call to action, I'd say join Discord, follow us on Twitter, take a look at the vaults, see if there's anything of interest, and keep up to date because we're shipping like bandits. We're shipping fast and hard. Devs are deving. And yeah, guys, thank you very much for having us on, and looking forward to the next one.
Thank you so much. It's been an honor.
Lux, Miri, thanks for joining, guys. And everyone, have a wonderful weekend. We'll see you next time. And again, please don't forget to subscribe to the Edge podcast. You can also find us on YouTube, just at DeFi Dad on my YouTube channel there. So thanks, everyone.
Thank you.